Hello, David Yost here with Yost Agency. Thanks for tuning in. Today I want to take just a few minutes and visit with you about the designed high cash value life insurance plans. We mentioned this or touched base on this in a couple other videos, but I wanted to give you a little better understanding, maybe even a visual on how this works, in hopes of this will help you understand the benefits and why someone would choose this type of plan. Now, the term designed high cash value life insurance really is one that I just come up with. Similar plans are called different names by other agents and advisors. But to me, this kind of described it the best because it's not just a cash value or whole life plan. We design it purposely, differently, so that it builds cash value up sooner and more of it. So, with that, how does it work? Well, from a technical aspect, there are two riders that you can add to your policy that will help you to accomplish those goals. One is a paid up additions rider, or PUA. The other is a version of a term rider. Now you can use one or the other, or both, if your company or plan allows it. Both riders are there so that you can allocate more money towards the cash value of your plan. So let me just repeat that. It allows you to put in more cash towards the cash value of the plan. And that's the emphasis here, is to build cash value. Okay, David, that's fine. You know, that's the technical of it. You could show me numbers all day and you could explain this and give me the definitions, but I don't know, can you do better? And I got to think about this because I really do like to keep things simple. And as I was thinking about it, cartoons came to mind. Yes, cartoons. Well, I'm old enough to remember the really good cartoons, such as Roadrunner, Wile E. Coyote, Bugs Bunny, Daffy Duck, Elmer Fudd, even Scooby-Doo. Well, as I was thinking about those cartoons and chuckling to myself, there seems to be one scene or one episode that all of them had. And that was the episode of the snow-covered hill or mountain, and somewhere along the way, somebody got tripped up, and they're rolling down this hill, and the legs are flying, and it's just getting bigger and bigger and bigger. Kind of like an avalanche at the end in some cases. But, so that's what really happens here is, you know, that snowball, as it goes through, down the mountain, it just gets bigger and bigger and bigger. So if we look at this, and we think of this snowball as your cash value, the slope of the mountain is time, your lifetime. It really does explain. So, most of your cash value policies do just this, that they'll build cash value and it will grow over time, and at different times in your life you can have access to it. Okay, well, geez, that sounds like just your ordinary policy probably would work for me. What makes this so different? What does the designed high cash value policy do? What it does, as you remember, is your cash value grows sooner and there's more of it. So it looks more like this. It's still that snowball rolling down the mountainside, getting bigger and bigger and bigger, but with the design of the policy, it starts off more and it gets larger and larger than it would otherwise and sooner. So if this slope is your timeline or your lifeline, in the beginning, Yeah, there's some there. As we go through the years, there's more and more there and more available for you. We'll consider this down here retirement. Okay? So, what's the big deal about this? Because it's life insurance, right? Yes, it is. But because this is designed to emphasize cash value more so than ever before, or with other policies, you have access to more cash value sooner than you would otherwise. So, what can you use that for? Well, it may be for emergencies, such as the furnace went out, car broke down, we need to either fix it or trade it. It might be medical expenses that were not covered, and any unexpected expense, really. We call those emergencies. Or it could be opportunities. Maybe that vacation comes along, that boat, a real estate opportunity that comes along, or a business opportunity that comes along. So at any point in time, you have access to your money. Well, this is a good thing. So if we want access to our money, we're hoping there's more of it, and we can use it whenever we need to. Another use of this money is for higher education for either you or your children. So there's a lot of benefits to utilizing and using this cash value. Now another benefit I mentioned down here, we're going to call this retirement. This is where you build up the most money in your plan. The most is available. What can you do with it then? Well, it can provide a supplemental guaranteed lifetime income. So let me look at that again. A guaranteed lifetime retirement income. So this is going to help when you retire. It's going to help you have more retirement income, have more after-tax retirement income if you choose to use the policy that way. So it gives you flexibility, it gives you choices, it gives you an opportunity to be in a better financial place. And that's what we're all about. We want to help you get into a better financial place. So, the old snowball rolling down the mountainside, that visualization really does reflect the growth of cash value and the enhanced growth that you can get with a designed high cash value policy. That about does it for today. I just wanted to give you a simple visualization, not take a lot of time today. But you know this cartoon thing? At first I really thought about it, but the more I think about it, stay tuned because I think we're going to see more how cartoons, life insurance, retirement planning, financial planning, all ties together. Hey, appreciate it. I want you to have a great day. And check out our website, yostagency.com. Until next time, we'll see you.